Welcome to the world of hidden geometry. If you look at this chart, you see how prices went up and down and up and down. And what's really kind of neat is you can use simple, easy to understand geometric techniques to help you determine what's going on. Here, for example, is something in the middle here called the median line. This is often known as the Andrews pitchfork, but something as simple as the median line helps you to have an understanding as to what the channel is that prices are most likely to be in and what the direction of the market is. Let's see another example of this. Let's go here. Okay, this is the S&P index, and simply taking 3 points, we can see that prices stuck around in the channel and are heading down. And according to Dr. Andrews, prices make it to the median line 80% of the time. Now, that does not mean that you simply draw a line and wait for prices to go to the next median line. That would be nice, but it simply doesn't work out that way. So there's lots of really neat things that you can do with median lines and some of the other techniques that are part of the Andrews course at andrewscourse.com. One of the things that we do that we really help people get started with is something I call yes, yes, yes. And there's 3 yeses I'm looking for. Yes, I can see the trend. Yes, I can see the target. Yes, I can see tight risk entry. And here's why. Typically, when somebody's let's say a novice investor or starting with something, they often have a tendency to prefer to stay with the trend. Not only do they have a tendency to prefer to stay with the trend, but they will often, well, let's say want to get in after the trend has actually shown itself. So they might be more likely to get in here after a little pullback, or here after a little pullback. Okay, so we look for yes. So the yes, yes, yes technique is not looking for the extremes, as you'll often find with Andrews techniques. It's very common to look for and find reversal points with relatively low risk. So what happens is with this in here we had over here we had a yes, yes pattern, and here we had a yes, yes pattern, and meaning at these points, this point here and this point here, I had my 3 yeses. Simple as that. There's a variety of other concepts that would also be relevant at those points. For example, remember the concept of lines of resistance become lines of support, and so anyway, so here theoretically prices broke through this and then came back down and went up further. This is not the line we used, by the way, but it's one that's popular, that's out there. So, and you have the same thing happened over here. And they broke above and then they came on under and up they went further. Not what we used, but it was there. So anyway, there's the yes, yes, yes pattern, and at these points here it was very easy for me to determine, and anybody else who's taken the course, to determine that this was obviously reversal area, reversal of trend area, and then yes, it just kept on going here, and when prices came down they gave ample opportunities with tight risk to enter the market and take advantage of the uptrend. Now, why do I point these out? Well, if you look through the history of what Andrews did, like I did, you'll know that back when he used to do what I call pretty much turn water into wine, where you take a $5,000 account and turn it into $50,000 in a in a few months, he would do this in the futures market. And what he would do was he would take a position and he would stay with that position. Meaning, let's say he put on 2 or 3 contracts here, he'd stay with it, and as prices came down, he'd add on more. Prices come down, he'd add on more. And that seems like crazily risky. However, he was able to do this with incredible accuracy. So what did he do? Well, very simple, very straightforward. He used the yes, yes, yes approach in order to add on more positions. Now, that's not necessarily the lower risk way to do it. The lower risk way to do it might be that after prices zoom on up here like they do here, take profits, let them come back down, and if they do come back down, then use that as another opportunity if you have the yes, yes, yes pattern. Okay, here's another example of this. And the reason I like the yes, yes, yes pattern is because it's so easy, obvious, and has pretty good probability. So here we had a nice trend reversal, and here we had come down to test the trend, and here we had our yes, yes, yes situation. Now, from 380 up to here at 402 hasn't quite reached my target yet, but I got a nice low risk entry over here, and it's so far the trend seems to be working out rather nicely. Okay, so where am I looking in the future for a yes, yes, yes pattern, a yes, yes, yes buy? Well, one of them I'm looking for is in this one here, POWI. Now, here I had the trend reversal indicator, and here you see prices come up and come back down, and now I'm waiting for certain things that occur in the yes, yes, yes. This is hidden geometry that we teach in the course, and it's as simple as that. Now, this is one of the bonus things that we're giving out in the summer. When I come back from the seminar trip I'm going to be on, we'll be talking about this a bit at the seminar, and also talking about it in the July to September time frame quite a bit. And here's another one that I'm looking at for yes, yes, yes patterns down the road, and this is short the euro effectively, and this is an ETF that I happen to own shares in. And so right now, while I'm already long, as prices continue to show me that the trend is up, and I get a nice little pullback on a yes, yes, yes pattern, then it would give me another opportunity to put on additional positions if I wanted to. Okay, so this is how hidden geometry works. It's not real difficult. Please join us at andrewscourse.com and ask for the bonus about the yes, yes, yes pattern, and you can see the video on the yes, yes, yes pattern. We'll be putting it together in July of 2011. Thank you for your time. See you at andrewscourse.com.